What's the last name?
Plonis.
Oh.
Hi, I am Ron Plonis, as Josh just said, and I help real estate investors implement systems and concepts to avoid some of the problems that I've avoided and to duplicate some of the successes. So today, if you're struggling or you're overwhelmed with how to get started or how to get from 3 deals a year to 10 deals a year, from 10 to 20, I'm hoping that there'll be some takeaways in my presentation, which I prepared to be 3 hours long, and Josh just let me know there's only 15 minutes. I'll pare it down and go fast. So a little bit about, all right. Is that blurry or clear or good? Everybody see? Here's what we're going to cover. We're going to cover about me. We're done with that. That's boring. The big thing that most people are interested in this market is how to get deals and what different sources are. So the majority of this presentation will focus on that. But just getting a deal doesn't guarantee success. You have to really set your project up for success. And you can manage your project, then ultimately sell it. So just in general, that's the agenda for today. All right, just a little bit more background about the things that I've been involved in. I started about 12 years ago with a company called Spirit Properties. It was primarily a wholesale company under a franchise model here in the Chicagoland area. And we did a lot of flipping of just contracts, just get something under contract, sell it to another investor, and a lot of getting properties under contract as rentals and selling them to other investors. But as the market started to deteriorate in '08, we saw an opportunity and formed a partnership and built our rental portfolio fund, Genesis One, which accumulated over time probably 200 rental units, 50 of which we sold to some institutional buyers, which that's just basically all the Wall Street money that came into the market in 2011, 2012. We supplied them with rentals. Since then, we have sold most of those rentals with seller financing. And then along the way, Exodus One was born probably in late 2010, early 2011, as the banks required us to have more income. So we started a company that was dedicated for flips, and we flipped properties on the retail market. So just like you see on HGTV, actually when we started it, there was no flipping shows on HGTV, so it was an ideal time. But the hallmark is really high quality. So that's enough about me. Hopefully I'm pressing the right button. So deal sourcing summary. And a lot of this, I don't know who's in the room, but we're going to go down to the very basics of where you can get deals. So there's, really the MLS, brokerages that focus on the MLS. And I'm primarily speaking to some of the things we're currently using now. There's really only a few methods to get deals in a legitimate, systematic way. We'll talk about the things that we're working on in this market. You can work with investor brokerages, you can buy deals from wholesalers, and you can get your own off-market deals to flip and wholesale yourself. But the one thing to know when you're about to buy, because that's what everyone's interested in, is know what your exit is. You need to know what you're going to do with this property before you buy it. You need to know what it's going to be, and you need proof about what it's going to be. Proof comes in the form of a repeat buyer, but that's pretty elusive, but proof comes with market data. So it's more, everyone thinks of that as like a bolt-on at the end, that the sales is just something that you have to do when it gets done. But if you don't get your exit right on the acquisition, it's probably not going to turn out well, because generally speaking, about 85% of the people that get involved in this business fail. And of that 85%, they're failing out. And then there's another 5 or 6% that fail a few times and then get it. And then in terms of longevity, there's very few people you see that are in these rooms year after year after year. There's one right there. Sorry to point you out there.
I don't vote. This one.
So back to deal sourcing. Real competitive, real crowded. So if you think of the MLS, because I'm going to end up comparing and contrasting off-market to open-market properties. It's hard to hold the microphone and be animated at the same time. So MLS is multiple listing services. These are people that put their house for sale. 10 years ago, that was kind of a closed system and only certain people had access, brokers, but now it's pretty open to everybody with Zillow and Redfin. You could look up and get MLS information, tax record information about what's for sale. Those sources are out there, but there's a lot of manual underwriting, and underwriting goes back to the point we just made about know what your exit is. So underwriting is what can it be, what can I pay for it, etc. A lot of work. Then there's, for more help you can get on open market listings, you could work with realtors or brokers who specialize with investors so they understand concepts of what margin and spread is and what a typical investor would need in a typical market to buy a property and then be able to renovate it, sell it, and make a profit. Most of those brokers, it's just natural economics and human nature, will form relationships with preferred customers, meaning they know that this person will execute on a purchase, they know that this guy or this firm is going to be good for it. So they're going to work with those. It's path of least resistance, less unknown, less uncertainty. So when you're going out to work with another broker, if you're the new guy, just know that you're going to probably not start out on that preferred list. We were fortunate enough that we became on the preferred list because we worked with people and built systems together eventually through the market when the MLS was really like the Walmart of deals. You could just, there was no real focus on off market. I mean, people in the room that run wholesale systems would know that in 06 and 07, it was at the peak. Everybody was wholesaling. As soon as the bottom fell out, I stopped wholesaling. I stopped paying money to wholesale. I stopped being a wholesaler and just bought on the MLS and accumulated assets. So I'm rambling. We'll get down to the third point there. There's some brokers that have actual systems that are built for investors and it's an open platform. For example, like a roof stock will supply turnkey investments to people who want turnkey rentals. So people in this room may want to buy properties, renovate them, lease them, and then sell them on roof stock. So that's an open platform where it's an open market and there's a sense of fairness for people who want turnkey rentals. That's not an opportunity to buy or for deal sourcing for you, but it is an opportunity to keep in mind your exit. But in terms of software for investors, there are platforms in the market that we use, like ClickInvest. Rosario is with ClickInvest. They have a platform that we do a lot of MLS work, and when we started working with ClickInvest, I think we're in our third year now. I think we cut probably two hours to an hour out of our daily underwriting time to get the list of stuff that we want to look at. So I would recommend that. The one thing I really like about that platform and that philosophy is that it not only funnels the MLS down into a list of stuff that's relevant to an investor, it also segments it to say, I don't care about Streamwood, I don't want Streamwood, it won't come to me. I only want Bridgeview, it would come to me. And that's all done without saying, let's give one to this guy, let's give one to this guy. It's a fair platform. So that's something you really want to look for. But I guess the point is that open market's going to have a lot of competition, so just pick the most efficient thing you can do because you're going to have to be fast. And then if you're going to partner with a broker, try to find something that's the most fair method. All right, how am I doing on time? How am I doing on boredom? Another way you can get deals is you can buy deals from wholesalers, and we'll get into wholesaling, but you have to make a distinction first that a lot of times off-market and wholesale are thought of as synonymously or the same thing. It's not really the case. Off-market is typically a good way to get deals with enough margin to wholesale. Wholesale is no different than any wholesale model in retail, where it's somebody is selling inventory or a supply to a middle party that intends to enhance, use it as an ingredient, and sell retail. So wholesale, you could buy materials for your manufacturing business wholesale, you could buy spark plugs that you're going to sell at an auto parts store wholesale. So wholesale is just an economic model that's been used in this and mistaken with, I shouldn't say mistaken, but conflated with off-market properties. The fact of the matter is, off-market properties are typically the only ones that can be wholesale, because if they were on the open market, they will get to the next buyer, or the retail buyer, or the investor buyer. So buying deals from wholesales, it's really going to be about relationships, because not only are there a lot of wholesalers, there's a lot of wholesalers that don't know how to wholesale because of the education, and most of the programs that are in the market teach people wholesale is the way to get into real estate. You end up with inexperienced people. So you have to work to find the relationships with the people that are professional wholesalers. And there's probably 50 to 100 of them in the Chicagoland market that are professional wholesalers that actually have the investor they're selling to's interest at heart, and won't move levers on the numbers to make the deal right. And there's probably about 15,000 that don't know. So it's work just like anything else. You have to find the right people to work with, build relationships with them, and you have to be decisive, because if you've ever been a wholesaler, you know that you're on the clock. Once you get under contract, it's a race to get a buyer, keep the deal together, and you want to work with people you trust. So it's a good source, but you have to find the right guys. This other stuff at the bottom is just economics 101 about what the market conditions just determine where you can spend your time. And right now you just have to spend your time with the right wholesalers, and if you're going to use the MLS, just partner with the right people and have systems. We'll get to if you want to be a wholesaler or buy properties off market in a minute. Did I go backwards? I did. Okay, so this is so packed full of information and so blurry that I'm going to try to, this is the part that was going to take 3 hours. So this slide is all about the reality of being a professional wholesaler, and putting that next to the environment that I painted, that there's a lot of people that think this is something that can be done pretty easily, and there's a lot of people that can't do it unless you put the right effort and systems in place. So as I said, this is how I got started. I only stopped doing it because the MLS became a smorgasbord. But it all starts, if you look here, with lists and mailing and signs and marketing. So I'm going to simplify it and say it's just about lists. I mean, if you get into the bigger systems that are here in Chicago and you have enough marketing spend where you can have radio and TV and billboards, that's kind of a whole different animal. And there's there's ways to get involved in that. But if you're doing it yourself, you got to have a system for mailing. You got to pick a list, and you have to pick a list that is fresh, right? So there's a ton, just like there's a ton of education, there's a ton of services that sell lists, and there's a ton of services that says, hey, we have the lists and we'll send out the postcard. I mean, how many people in this room have gotten or owns rental properties or has had properties they bought and they've gotten a stack of postcards that look exactly the same, 15 of them, and the only thing is fill in the blank company, comma LLC is the only difference. Right, so there's this done-for-you services that do that. You say, I want people with 50% equity in LSIP in this zip code, and I want to send them this postcard. Everybody gets that. I mean, there's other services that are online that say, oh, we have that. We also have the owner's phone number and email address, and that's much better because you're going to avoid this postcard. Well, the fact of the matter is that my experience and the other experienced wholesalers I'm working with right now, and we'll get to the economics of it, but spend anywhere from $5,000 to $10,000 a month just to get one buy in marketing spend. And these guys are professionals. They've been doing it for 10 years. If there was a service that you could buy for $149 a month and get you the same results and get you into the same living room, you think they would have figured that out by now? They probably would have. So those are services, those are software services that, and I'm not trying to call anyone out. There's hundreds of them, so I couldn't call them out. But if they worked, I'd be using them. If they worked, I wouldn't be here because I wouldn't have time for all the deals I'd be able to get. What works is picking a list, picking a lane. So it's 6 probate. Say you want to blend a list. Say you want to blend non-owner occupants and merge it with eviction lists so you have a vacancy indicator so your data becomes a little more valuable. Pick something and start marketing. And it's not a, hey, this month I'm going to market and then I'm going to wait for the phone to ring. So here's the part where it gets expensive. You got to mail. It's got to be every month, every other month, every third month. You got to pick a cycle because anybody that's going to sell at a discount has to have an element of distress or a need to sell. And people don't schedule times to go broke. People don't schedule times for their spouse to die. And people don't schedule times to, want to go on vacation. As a landlord, something goes vacant and you just might be done. You don't know what month that's going to be. So you have to pick a list and you got to be timely. It's the example I always use is you buy a new car. First 4 years, you would never notice a single tire ad in the Tribune. But as soon as your tires start spinning in the rain or the snow, all of a sudden you see tire ads. They've been there every week. It's the same thing. I'm divorced, I'm bankrupt. Here comes, I hope you don't use postcards. So again, just pick a lane, be fresh. There's time and money involved and there's multiple cycles. So that's really the start. So you're saying, wow, that's really adding up because you got list cost, mail cost, all that stuff. You can do some of this in the done-for-you service, but you need to make sure you're differentiating. You need to make sure you're tracking what your spend is and what you're going on. And then that gets you into buy calls. So now this is where the fun starts. This is where there's 2 facets of it. It has to be treated like gold because you've just spent all this marketing spend. You got a call coming in. You have to make sure you can take it, and you have to make sure you know what you can and can't say. And you have to be able to not only tentatively underwrite the deal on the fly, but you need to understand where that seller is. So there's a lot of scripting and psychology that has to go into that. And one of the big things I'm a big fan of, and some people laugh because we were talking about it before, is there's that concept of pattern interrupt. So much like all these postcards, so remember they're only calling you because you were differentiated and they threw away the other postcards. When you get them on the call, this is where you have to continue that differentiation and do a pattern interrupt. And mine is always transparency and honesty and being brutally honest about how big the discount's going to be, how we're going to try to help solve their problem. But the biggest pattern interrupt is like, the discount's going to be big, we're going to try to solve your problem. If those things overlap, if my deep discount and what you're willing to take happens to overlap and it solves your problem, then we'll be able to help you. And as opposed to just trying to get in the living room. The relationship starts there and the time saving starts there, because even though you're probably paying $150 to $200 to get that phone to ring per call, you also don't want to go down to these steps if it's a dead end, unless you're in the beginning and you need training. You want to learn how to do all those steps, even though they're dead end deals. Underwriting, I'm not going to go too deeply into that, but it really kind of overlaps between buy calls and appointments, and it really is this on-the-fly expertise. You do get a good chunk of time between a call you feel is good and you've pre-underwritten on the fly on the phone and determining to write an appointment. You do have a good chunk of time there, and there are a lot of things that you have to prepare for and kind of forecast what the house may or may not be when you get there and what kind of comparables may or may not be when you get there. Because when you get out there, you want to equip yourself with all the information you need so you can listen to their problem and then be prepared to make an offer on the appointment. So, is there any questions so far? Because I'm just really trying to push through this because crazy time frames. Anything? All right. So appointments, they're time intensive. This is where you're talking about hard costs on the marketing. You're talking about dedicating time in these middle ones, but there's some serious time on appointments in terms of the amount of prep. So I remember the analogy I used to use as we were segueing from 07 to 08, and now it's going back the other way. is that it made sense it would take us 1 hour to buy something on the MLS, and it would take us 10 hours to buy something off market. So you just have to make the determination, because you're going to be buying at 65 cents on the dollar here versus 75 to 80 now on the MLS. So you're trading this system for more margin. The art is to make sure that you're tracking every step to make sure that this, for simple math's sake, if this costs you $10,000 per buy in marketing, or let's say 5,000, is, you know, if you're really efficient at it and you're really good at the appointment, that and the time had better be cheaper than if you just made more MLS and got more MLS marginal deals. So that's kind of where you can compare and contrast. Because everybody that specializes in off-market will give you the whole story about why that's the best thing to do and why MLS sucks. And everyone who does MLS will tell you why MLS is so much more time efficient, and I don't want to go sit in the living room and listen to those stories. It's all true, but you have to have your own blend. So for us, we do about 80% MLS and 20% buying from wholesalers. I don't do the wholesale system anymore. I could, but I haven't run that system since, like I said, 08, 09. I still get a few calls trickling in from marketing from 10 years ago, but very little. Are there any questions about that?
Where like, as a beginner, kind of done 2 flips, where do you find the wholesalers? And like, I've pretty much, if I see a sign that says "We buy homes," I'll write that number down because I figure that's a wholesaler.
Yeah, and there's a lot of proven methods like that, and that is a good one. But you're still got to separate the good from the bad, no matter which method you do. For me, since I was a wholesaler, I still know most of the guys that are still doing it, and the new ones that I meet, I mentioned Click Invest. They don't deal in just the MLS. They have wholesalers that supply for them. So our off-market stuff comes from there. We buy some things direct. So it's, I would say, if you're just starting, you're just doing try everything, and you'll learn what's real and what's not.
Okay.
And just build your systems if you're going to have a system. Because I used to do this. I take a picture of the sign. If I'm in the car, I'll do the call. But you really want to track what you're asking and the answers you're getting. So if that guy turns out to be a waste of time, you'll know those indicators over time. So it's a tough market, because like I said, wholesaling is the entry point for many training programs. So you get a lot of people that are learning, and just like any business, some of them are good or some of them are bad. It has nothing to do with real estate. Okay. That's it for deal sourcing. I'm trying to pack it all in. Everything good? All right, so we've underwritten the deal. We knew what our exit was. We got a good deal. There's 35 points of margin. We're very happy. We got the contract signed. We're not going to wholesale it. We decide we're going to flip it. We're going to actually renovate this house, and it's going to be great. I hate to beat this into the ground, but all the training programs teach how to wholesale and teach how to get a deal. Nobody knows what to do here. So when we first built our company, the rental one, we had all sorts of rules, and it was the bottom line was, if we weren't swinging hammers the day of or the day after closing, something went seriously wrong. So you see it on TV that's how it's done all the time. You see it conceptually, but you don't really see it. I know how we do it, and I know we struggle to make hammers fly the day after closing 100% of the time, but that's our target. So we call it month 0, and month 0 is important because running a flip project, or a project that you're buying to ultimately rent, the day you close is the day you started, think of it as a mini business. You have carrying costs, you have employees, you have taxes, you have insurance, you have interest, the meter's running. So the more you can get done to set your project up for success, from contract acceptance to purchase closing, it's paramount. I mean, the things, we call it month 0 because we're not only preparing the project, and I'll try not to bleed the slides, but we're not only preparing the project, but we're building the plan and the project as we go. So much so that this must be done before, for example, between acceptance and before we do an earnest money check, we actually inspect the house. So we don't even do earnest money. We try to actually get a full contractor through to inspect the house to validate our pro forma budget. Between earnest money and the inspection period, we have 2 more contractors come through the house and a realtor to confirm our valuation on the property matches what we underwrote it and what the presenting broker or wholesaler underwrote it at. So now we have our 3rd validation of value. We have a realtor helping with design, and we have contractors pricing that design. You can kind of see that if all these things change, if, let's just start with an example, you're buying something for 100, you're gonna sell it for 200, and you think it's gonna be 50. If in that 3 days you find out that it's really 180 and the construction's really 80, you either don't send in the earnest money or that's the only risk that you had if you don't cancel it before your inspection. So you just start this whole validation process. So you basically, the 2 most exciting times for me is when the contract gets accepted and the day that the hammer swings. That time period after that, it's all a lot of work, and a lot of work. But this is the fun stuff. But it's kind of a dichotomy because it's the fun stuff that if you don't get right, you really, the more the clock ticks, the less you can affect the outcome of the project. And the beauty of this one is you're doing it on the seller's money. You're not paying for anything right now. This is just work. You don't own the property, you're not paying the taxes, you're not paying to get the lawn cut, you're not shoveling the snow. So that's what we call month 0. So we have all kinds of systems and gates that you have to check off. Sorry, I'm going way too long on that. Any questions on that?
I have a question about it. To swing a hammer first day, like, do most cities give you, like, can you get a demo because obviously it's going to take a week or 2 to get your permit approved, your plans approved, but will they let you start demo the day after?
Well, it depends on the village and the scope of the project.
Okay.
So we're hard and fast. We will always permit if it requires permit, even if there's a gray area. We'll get a kitchen remodel permit if we're only doing the remodel. The question is tough because it varies so much because we build houses and we just do cosmetic rehabs. But yes, there are certain gates you have to meet to get a demo permit. Sometimes your plans have to be in review before you can demo. Sometimes it doesn't, depends on what the scope of work is. But yes, the goal is to pre-permit. We have a system that usually at 2 to 3 weeks after we get through the gates that we are going to buy it, 2 to 3 weeks before we own the house, we apply for permits as if we own the house.
And they'll do that if you're not the owner of record?
Well, they'll do that if you're not the owner of record and you don't tell them you're not the owner of record.
Okay. So some cities, so it might work in some cities.
Yeah, so some cities are going to say, I want the HUD, I want the water bill, and you're going to get shot. But what we quickly shift over to do is make sure the contractors and all their subcontractors are licensed, bonded, and insured in that time frame. So the goal is to swing hammers on day 1,
Right.
But if there's a legal reason why you can't, then you can't.
Right.
But usually you can get demo done and demo started. On the bigger projects for us in reality, we're typically in plan review while demo's going on. And, we budget a certain amount of time, but we're surprised, just like anybody else. Woodridge started to outsource, or Oak Park started to outsource. We've done projects at Oak Park where it was all new construction. We got approved in 3 weeks, and the next time it took 3 months because they outsourced their plan review. Yeah, any questions other than that? But the key is to leverage the standard contract and use that time so you can get out or validate your project. You don't want to get out, but if you get a big surprise, you need a water service, you're going to be $9,000 over budget on a $20,000 project, you might want to get out. Keep breaking this up. Going the wrong way. All right, so during that time period, you've marched the contractor through, you and your realtor are on the same page. The broker was sending you said it was worth 200, your realtor says it's worth 200, you feel like it's worth 200, and now you send it to your funding source and they send out an appraiser and lo and behold they think it's 200. So you're in good shape. You still haven't closed yet. You also had 3 contractors come through. You pick the one that's closest and can execute the fastest. and has the right price, and you've written a contract that is more of a roadmap and the transparent truth than anything else. So what we found is that the more you can put in your contract, and I'm not talking about legalese, but the more tangible specificity or specifics, pictures, blueprints, timelines. If you finish 1 through 15, you get paid X in the contract, the better. So that's how it started. What we also found is that if you write that document together with your contractor and agree on all those points, what it is, what the pictures are, what you're going to get paid at what time, and what dates, and what the, we don't use penalties, we use you don't get paid until you get done as our incentive, the more it lubricates the entire process. Because invariably, I don't know how many projects amongst the group here have been managed, invariably you'll get this email 3 weeks into the project, I need a payment for $10,000. And most contractors think that that's an okay thing to do and assume that you just have these $10,000 chips laying around in your bank and you can flip them out because he asked. You can, and you get yourself in trouble because it's going to affect other portions of your business. You might not be able to pay yourself, you might not be able to pay your people, you might have to stop another project. Well, if you say, oh, okay, let me bring up the document we worked on, it says, okay, looks like drywall and trim's all done. Well, no, drywall and trim's all done. Well, that's what we agreed to. Let's get that done and we'll get you your payment. Because under all of this, you know, in most cases, you're going to have either a bank or your own money or a private lender that's going to disperse based on what's done. So you want to link those two things up, the contractor, you, and the funding source, to what's reality and transparent, and agree to it in the beginning, and all of those things work out. Not getting the last payment until final inspection. I mean, there's just a ton you could put in there. I don't want to bore you to death. But the point is that you put together a document that's really clear, not technical, layman's terms. You do this, you get paid this. I'll do this, you do this. And that's how we execute. Because it's you can't cajole people into doing what they want. You can remind them of what they agreed to do. And this is the way we do it.
Do you offer bonuses for finishing early?
We've also offered bonuses at a management level for finishing early. We've never offered a discount to the actual price for finishing early. We've had some kind of profit shares, you know, on if we're under budget, you know, you can expect X of that, and it requires an open book. So it really depends on how you're constructed. When we had heavy incentives, it's when I actually had a full-time general contractor working as an employee. We've since we've scaled back from like 40 projects a year to 20, just because we're doing higher dollar value right now. I just employ general contractors. So in order to put an incentive program in there like that, it would be more of an open book, and it's probably harder to manage. But yeah, incentives are all good. What I do know that never works as a straight discount, but works as a negotiating tool, is late penalties. So we had for years this $100 a day late penalty, or then we made it a blank. We calculated our carrying costs, so we thought, but it never really works out because the people you're working with are just trying to get it done. And if you don't pay them too far in advance, they will get it done. And if you know the right questions to ask them when you're hiring them, they will get it done. Okay. Any questions on construction?
What is the right question to ask them?
The right question, what we did, what we do, I mean, we have so many mature relationships with contractors. I don't know, last time I went to go hire a new one, is what we do is it's a field interview. We walk one of our finished properties with them, ask them what they think, and just get feedback and see if it matches with what our expectations is. And then we walk one of our projects before it's done, raw. And then this is a showstopper. We have to walk one of their finished projects and see what their quality looks like. And then we just ask questions about what we see or don't see. I mean, there's a lot. You know, if they pass that gate, then we talk about how we pay and the contracting process and those things. But really, it's all about experience. You know, when you get started, you might have to work with somebody with less experience. But remember, if you're starting with less experience, you probably want to pay more and work with somebody with more experience because you can learn from them because they've been through it before. Hopefully with an investor that they've learned from. So, anything else? All right, I think I'm almost done. Okay, so sales. I kind of stole the thunder that this is the end. That if everything's done right, if you've validated your value on the front end, you have buy-in from a realtor, you have buy-in from your bank, yourself, your broker. Everybody feels like it's the right property in the right location at the right price. You've already validated the design with the realtor. This should just work. If this property doesn't sell itself at this point, you missed on the value, usually due to size or location, or you've missed on what features needed to be in the house due to bad design. I'm not trying to say this is easy, but this should be the easiest part. And also, the way the system's designed has to be the easiest part because 95% of what you can affect on this project is already in the past and can't be changed. You already paid what you paid for it. You already took as long as it took. You already paid to renovate it. The only tool you have right now is to drop price. So that's why this is, you got to work with the right realtors and do the right pre-marketing, and that stuff happens during construction. I think I skipped that bullet point. But you're working while the project's under construction to get pre-marketing and sales going depending on the project. Some things you can't pre-market, some things you can. So, but the key thing is that you're tied to this, you're married to this project at this point, and the only thing to undo that is sale or divorce. That's it. And the big point is what you want for the property or what you need because you went $50,000 over budget on construction, completely irrelevant. So that if you ever hear yourself saying, okay, your contractor says it's $10,000, you have the water service, you ever hear yourself saying, I'm just going to add $10,000 to the price, you're in trouble. The problem that needs to be solved is, I need the water service to get a final occupancy. Where can I cut $10,000? Or can I still make money if I spend 5 or 10 more? You can't ever think of moving the sales lever as a solution to your problems while you're in execution. I think that's all I got. Q&A. Anyone? That's it. So I do.
Wait, Ron,
Yes.
you got a question?
Question?
So what areas are you like specializing, like what suburbs and so on?
All right. Historically or currently?
Currently.
Currently anywhere 50 miles from Naperville. So that takes us from probably Lansing to Lincolnshire. So we have preferred areas. We do different types of projects. So we do cosmetic rehabs in near the medium price range. So for example, the medium price range in Woodridge is like $380. So we'll do a $400,000 cosmetic only rehab. And when I say cosmetic only, it's like $70,000 because it just means we're not changing infrastructure, mechanicals. Because cosmetic only is sometimes mistaken with low price. It's not. It's low surprise. So you may still spend $70,000 to $90,000 on a cosmetic rehab. So we're doing those anywhere. So it's the area is, if it's in Lincolnshire, the median's higher, so the metrics change. We do value adds where we're basically buying footprint and land size in train towns like Oak Park and Brookfield, where we just say it has to have a 33 or higher wide lot, 25 deep. Base floor plate has to be 1,100, and it has to be concrete. Basement height has to be X. So those are value adds. So those we do anywhere in train towns. We also are in the midst of getting ready to purchase rentals for institutional buyers. So we just adopt their criteria, and that could widen that. So everywhere. But we've done, South Side, and we've done some of the C neighborhoods and sold them. I don't prefer going there, but the market might take us there.
You said you're doing fewer projects because they're higher value, so what price point are you in?
So I would say on average, our low price point would be 350
After?
after repaired value. Yeah, so the end would be 350. That would be the low side. We did just take down 3 properties that will be rentals sold to institutional buyers. That'll be close to the 180 to 200 mark. Are on a high end, $900,000 in Burr Ridge, Elmhurst. Those are typically value adds. So it ranges. The only reason we changed the whole model, and I go back to the 06, 07, the olden days, was we would only stick with median properties, and we tried to keep our capital units as low as possible. But there wasn't a lot of competition because nobody had money in 08 through 12. And then the funds came in. So as soon as more money began to come into the market from institutional investors like Invitation Homes that have bought, thousands and thousands and thousands. I mean, Zario can talk about it. He's sold them thousands of homes. That caused more competition in the market. But the real big competitive force in the market right now is linearly related to the number of shows on HGTV. So, and I had an interesting conversation with somebody yesterday. It's like, well, all those people are going to lose and they'll be out of the market. Well, what's happening now, because it's fun and exciting, and it's funny because I think a TV show factored into me doing this in 2006, is that, most of those people that are watching TV shows and not applying some of this diligence are going to fail, but they're usually replaced by 3 or 4 more. So what that's causing is, and I don't think Barnett would fall into this, but there are so many lenders and so many capital sources out there that will lend to people with no experience. Well, these people with no experience are paying $120,000 for that $100,000 example we gave. So it's causing us to not be able to buy properties. So we had to go up market to get to a point where beginning investors couldn't afford that risk profile, but we could because we had experience. So we learned a whole bunch of new stuff, also known as lost money in a few cases, when we went out of that median. Because medians, we're big about economics and demographics. Median just says the most buyers are here. More buyers, faster sales. So I would recommend, if you're starting, whatever market you pick, if it's Auburn Gresham or if it's Schaumburg, stick to the median. Don't go 10% higher or lower than the median. But again, all of the training says that, and all of the beginning investors are going to be doing that. It just means more work. So you're going to find, if your real estate journey right now is how do I get deals, this is one of the hardest. This was harder than 06. This is the hardest environment to get deals that I've ever been in a single family rental or single family sale asset class. Probably, but you just have to be prepared to work, track what works, and just repeat it. And that's how we've done it over the years.
What would you say is a good cutoff for where you're gonna cut all those like beginners out of the market? Like what price range? Because I'm finding it difficult in the price range I'm looking at. I've done like 2 successful flips so far,
Good.
and the price range I'm looking at usually get a ton of offers. And I'm like, I figure with that many people offering, some bonehead's gonna offer way too much.
Yep.
So I can't even get involved in the competition there.
Yeah.
So I'm just trying to get more creative and look for stuff that maybe they wouldn't want to look at.
Well, so in terms of, it sounds like you're talking mainly about open market stuff on the MLS.
Yeah, because I'm a real estate agent, so I like to
Right.
say that because I get commission on both ends, so it helps.
That helps.
Yeah.
That helps a lot.
Yeah.
So to say what, I don't know where the cutoff is. I think that generally some beginners just don't know, and they think that buying something that's worth $200 for $50,000 off because they're going to be able to paint it and sell it, they think that's enough. So there's no real market where that stupidity enters or leaves from. What really governs, I'm sorry if I insulted anybody. What really governs how high the stupidity can go is the amount of capital. So the higher the project value, you're going to be swimming with fewer fish.
Right.
The less desirable neighborhoods will also give you fewer fish. So, I mean, if you're trying to find discount stuff on the MLS in Streamwood, it's going to be a long year. You'll get one, maybe two, or if you work with the right partners, you might get a few. It depends on what your exit is.
So what, like your projected margin, like do you have a minimum on what you would even?
We do return on capital, so this is advanced, maybe 201 topic. So we look at blocks of capital in play. So say it's a $100,000 house and a $50,000 rehab. That would be one block of purchase capital and one block of rehab capital. So, and that should return 15% of that, so 15 times 150, I don't know the math, 22,750.
15. Straight up 15, right? Not
Right, so if we're going 300, it should be 22,750 times 2. So it's all a return on hard capital. It's not baked with carry. It's not baked with all of the other expenses, realtor expenses. So you come up with some rules of thumb about what you want to return on your capital, and then you manage the cost of your inventory, selling, realtors, staging, blah, 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 and then your administrative costs from there. So everyone's varies. So if you're start with what you want out of your real estate business. Do you want to make $20,000 a year? Then there you have it. Find two that'll make you 10, or find one that'll make you 20. If you want to make $50,000 a year, finding one that'll make you 50 on the open market's going to require a higher capital level. You're not going to buy something on market for $80,000, put in 80, and sell it for 280. If that hits the MLS, it's going to be high 200s, and you're not going to have enough margin. If it's bought off market, I mean, there's an example in the room. It's 80. I have something that I just bought off market that I bought for, I don't want to say because someone might want to buy it, but I'll be able to put it on the MLS for much more. So it's really what you want out of your return. I mean, being a broker is going to help you because you have one less cost to deal with.
I have another question.
I have another answer.
As far as staging goes, I was looking because like I'm trying to ramp up and do a lot more flips. I might even JV with like an architect buddy of mine just so we can get into the higher market. And we were thinking about just getting a storage unit and buying our furniture because one staging, we figured out how much furniture you could buy for just the price of one staging and just keep it in a storage unit and eventually kind of build up our inventory on staging. You can even stage for other people as well then, and we figured out that like the amount I spent on my first stage, I could have bought like a full house worth of furniture from IKEA and pretty much just have that for staging and then never have to spend $1 except for movers.
Yeah, it depends on two things. For us, it's a philosophy on if staging's needed, and that's a market specific thing. It's not we always stage.
Okay.
And then secondly, do I want to dedicate my resources, even though it's an expense, to having a staging business? So, two things. We only stage where there's clear market data that shows staged homes sell faster, which is typically never the case, or there's something about the house that is unexplainable because buyers cannot see what it can be. So if you have something, you get it done, you're like, the dining room's kind of funky, where does the TV go, where does the couch go? Staging is a solution to what is this room for. Now in terms of the second half of the question, if you wanted to do your own staging, it depends on your volume. For me, there's no way I couldn't run a staging business, coordinate movers, do all that expense, and try to find 20 to 25 deals a year. Right now, it's impossible. If you're in the brokerage business and you're only going to do 5 to 6, and you also have some other clients that you're JVing on or supplying properties with, and you have a business model for that, it's just a return on time. You're right, because the capital expenditure is low, and you can make the 2,000 or the 2,500 depending on how many rooms you're getting done. But it's another business, and it might be an opportunity, but if that's what you want to do, go for it. Yeah, I wouldn't do that because I don't like it.
What about virtual staging? Like in the
Love it.
situation you said, something odd. Doesn't that do the trick?
Love it. So the house that we showed on the thing, I could show you the inside. It's got some of the best virtual staging. So
It's amazing what they do with that.
it's really important because a lot of the market comes in through Zillow, and that is a detractor. That if you don't have stage photos, you might get less leads coming in that way. So we do virtual staging on our higher end homes. And in one case, it sold before it even hit the contract, just I think today. We were gonna put a flat panel in the kitchen and roll the virtual staging pictures because the flat panel was 600 and the staging would have been like 3,700. It was like a 3,000 square foot house. So I like virtual staging in the right cases. In the cases of I need staging to solve a room problem, not so much, but in the case of marketing and online, for sure.
Okay.
I don't even know what the cost is because our broker paid for it in the cases we've used it, because our higher end homes are selling for 7-ish. What else? You got Q's, I got A's. All right, so after all of that stuff, there's another question.
Do you see any slowdown in the high-end market?
I'm not an expert in the high-end market, so let's put it in a perspective. We've done 500 transactions. I'd say 30 of them have been over 500,000. I don't know a lot about the high-end market. What we have learned so far about the high-end market is that we want to be in what we call frame towns, because our product is built for the millennial who has a condo in whatever, I don't even know the good suburbs down here, or regions down here, and they're having kids, or they've had kids, and then they looked at the school they're going to go to, and they want to go to Oak Park, or they want to go to Brookfield, or they want to go to Elmhurst. So we kind of go after that market, and we know where that is. High end above that is really, I am consulting with a client who builds $4 million homes in Glencoe, and it's a high-risk business, but it's less, I don't know, I thought it would be more hand-holding and things like that, but it's really the same. It's just a higher risk game. So, but to answer your question in terms of the market, I don't know anything about it. I don't know anything about the economics of it, because you're outside of all this tried and true methods of sticking to medians in markets and knowing the farther you go out in the median, the higher your risk goes. Because when even 4 million in Glencoe is way outside the median. So I don't know. Do you know?
If you're buying cash, like at what point would you consult with an architect? Because if you're gonna have to pay them fees, you obviously don't want to do that when there's a potential of not closing, but you also want to get your plans drawn so you can submit to the city. Like you said before, are you
talking about Chicago or suburban project?
Suburbs.
So I don't know the differentiation between cash and not cash on that question.
Well, just because at least I know my lender can't turn the deal down.
Right.
So there's less chance of it falling through, because I don't want to pay $4,000 to an architect and then end up not getting that house.
Right.
So then I lose $4,000.
So are you saying that, because I'm just wanting a clarification, are you saying that you have to buy cash because it needs plans, or your lender's requiring plans?
I'm buying cash.
Okay.
All right, let's, so at what point would you get your architect on board in the 0 month process?
Oh, as soon as possible. So not as soon as, when I say as soon as possible, it's not the first day. So after we validate with realtor design and we validate it with contractors, it depends on what that design entailed. If there's moving walls, like this Woodridge example, we turned a 1970s house into a modern house. There was so much wall removal that I think we got the architect involved probably in the second week before we bought it. So after we had a contractor and had an idea and designed it with the realtor, we came through with the architect, changed the whole design because he came up with a better idea. So as soon as possible. With us, the problem that you're citing, we don't have. So he would do that design work for us and come out. And if we killed the deal because of something he discovered, there would be no cost.
Right.
Because we do the initial, initial design, and we've done, 4 or 5 projects with him a year.
Yeah.
Anything that requires drawings. I thought you were, because there are some financing sources that when we're doing a value add build, that they want blueprints before you finance it. They actually want you to buy the lot with cash and then do blueprints. But we're able to work where we send previous project blueprints and say, this is the plan, we're going to adjust it to this floor plate. So it's a little bit different there. Anything else? I always thought it was wrapping up and then another one came up. Anyone? So if you need to contact me, so I do all these, the real estate companies, if you kind of listen to the progression, I've sold all the rentals. The flip company's gone from 40 to 20. So I have this capacity, and I've been working with investors to help them with their real estate business, and it kind of depends on what stage you're at. But if you have any interest in doing that, there's a number. You can do my website's ronplonis.com, and then there's a link on there. You can click schedule a call, and we'll just hop on a call and see if there's any way we could work together, and that is what I do.